HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
All right, so we're talking about crypto, and the first question is, can you give us an overview of the US tax treatment of crypto? Okay, let's give a quick overview before we get into the other more specific questions. So essentially, the US tax treatment of crypto is driven by an IRS notice 2014-21, and there was another one in 2019, but we start with that one. So that, and together there's a series of FAQs, probably like 49. Right now it's end of March in 2022. So there are probably like 46, 47 FAQs on the IRS website on the tax treatment of crypto. And that essentially would be your guide. If you want to understand, you get that top line view of how crypto is treated from a US tax perspective. All right, so we're talking about virtual currency, convertible virtual currency, as some people call it, CVCs, virtual currency or whatever, okay? So essentially, virtual currency is treated as intangible personal property. So it's not considered a currency. It's considered property, right? So mining, people ask about mining. Mining is treated as ordinary income. If it is that you are paid in crypto for whatever services you provide, I think I heard there's LeBron James, I think he's getting part of his compensation in crypto. There's a politician in South Florida and Miami that's getting part of compensation in crypto. That is that's taxed as ordinary income, whatever their marginal tax rates may be. In terms of if it is that you are an independent contractor, then self-employment rules would apply, like 1099 rules. So you'd be subject to self-employment taxes and stuff like that. So regular rules apply. Let's see. If it is that you sell crypto, then you buy and you sell, right? So you need to keep track of your basis. And I know that some exchanges like Coinbase will give you, now they give you a report 1099, the equivalent of a 1099 store statement. But if you use one of those exchanges without proper reporting, there are software solutions that you can look at. I'm not going to name any. You can Google because I don't want to be seen as promoting any one over the rest. But essentially, what your tax team would need would be a list of the buys and the sells. So it's not fungible in the sense like a currency, right? It's viewed as non-fungible. So you need to be able to track each coin, assuming that you're a regular investor. If it is your trader rules will apply. Trading rules will apply. We do have some clients that are traders. But for most people who will be watching this, you're an investor. So originally, people felt comfortable with FIFO, first in, first out tracking. But IRS allows FIFO, LIFO, and HIFO, last in, first out, and highest in, first out. But being conservative, I think most tax professionals just feel comfortable with FIFO. Let's see, like-kind exchanges. There was a sentiment before President Trump's Tax Cut and Jobs Act kicked in at the end of 2017, there was a sentiment that crypto could be subject to 1031 exchanges like real property. But that has been that alleged loophole, because we were one of those teams that never thought it would apply. But I know other teams took a different position. But 1031 exchanges after Tax Cut and Jobs Act, there is no doubt anymore. It does not apply. So forget about that. Keep that in mind, depending on your position. In terms of airdrop tokens or new tokens received on division of a network into two networks, for example, they're taxable at such time that the recipient has dominion and control over the new tokens, right? So this was clarified in an IRS ruling at 2924, I think it was. So we'll get more into that in one of the other questions that I see coming up. But essentially, at the time that you receive those new tokens, that is treated as ordinary income as well. So generally speaking, reporting rules are the same as other property, right? So in terms of, receipt for services or upon disposal. And right now on the new 1040, at least for the past couple of years, it's front and center on page 1. Have you sold any crypto? So the IRS is obviously paying a lot of attention to that. The takeaway, I guess, is keep track of everything. I know it gets confusing if you have multiple wallets and different exchanges, but it's worth investing in either the right software solution for yourself or retaining the right team to help you with that. Helping you keep track of everything, because proper record keeping is important. I want to repeat that. That's your takeaway. Proper record keeping is super important. Hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.